You work hard for your money. You put it away responsibly in a savings account. But let me ask you this, is that account actually working for you? Today, we're diving into that exact question, and the answer? Well, it might just shock you. We're going to explore a simple change that could be one of the most profitable decisions you make all year.
So, let's just get right to it. Is your bank ripping you off? I know, it sounds harsh, but stick with me. By the end of this, you'll see why it's a totally fair question. Let's look at the evidence.
Okay, look at this number. $1. What do you think that represents? Just take a guess. The cost of a gumball? I don't know. It seems pretty insignificant, right? Well, it's not.
That single dollar? That is the total amount of interest you'd earn on a $10,000 savings deposit after an entire year at many of the biggest banks in the country. $1. For letting them use 10 grand of your money for 365 days. I mean, if that doesn't feel like a heist, I really don't know what does.
And this chart right here, it just shows how much is being left on the table. Look at that tiny bar on the left. That's your $1 from the big bank. The national average is a little better, sure, at 38 bucks, but then look at the bar on the right. With a competitive, high-yield savings account, that same $10,000 could have earned you $400. That's not just better, that's a whole different ballgame.
So how do we fix this? Here's the game plan for today. First, we'll dig into the great savings heist. Then we'll cover the high-yield antidote. After that, we'll meet the 2025 champions, the best accounts out there. We'll also get real about the trade-offs, give you a simple 5-step action plan, and finally, talk about how you can reclaim your financial future.
Okay, let's kick it off. Section 1, the great savings heist. Let's really get into the nitty-gritty of why that $1 return isn't just a low number. It's a serious financial loss over time.
Here are the raw numbers behind that bar chart. Your typical big bank is offering an APY, that's annual percentage yield, of just 0.01%. That's how you end up with that lonely single dollar. The national average is, okay, a little better at 0.38%. But the real game changer is a high-yield savings account, an HYSA, with an APY of 4% or even more. That's what turns your 10 grand into 10,400. It's all about that APY. Which brings us right to Section 2, the high-yield antidote. So if the problem is a ridiculously low interest rate, the solution is pretty obvious. Find a much, much higher one. So let's break down what these high-yield savings accounts are all about. So what exactly is an HYSA? It's really simple. It's a savings account, just like the one you probably have now, but it pays a way, way higher interest rate. The key things to know are that they're usually offered by online-only banks, and this is absolutely critical. They're FDIC insured, which gives you the exact same government-backed protection for your money.
Now you might be thinking, what's the secret? How can they offer such high rates? It's not a secret at all. It's just a way better business model. Traditional banks have massive overhead costs, right? All those physical branches, the staff, the vaults, you name it. They pass those costs on to you in the form of pathetic interest rates. Online banks, they don't have all that baggage. They are lean, digital-first machines, and they pass those savings on to you with higher APYs to win your business. Simple as that.
And let's just pause on this point for a second, because it's the #1 question people have. Is my money safe? The answer is a resounding yes. FDIC insurance is a government guarantee. It protects your deposits up to $250,000 per person per bank. And it doesn't matter if that bank is made of brick and mortar or bits and bytes. The protection is identical.
Okay, on to Section 3. So now you're probably convinced you need one of these accounts. But which one? Let's meet the champions for 2025 and put them side by side.
So here's a quick look at 3 of the biggest names in the game: Ally Bank, Marcus by Goldman Sachs, and SoFi. We're going to look at their rates, any special conditions, fees, minimums, all the good stuff. You can already see they kind of have different personalities. Let's break them down one by one. First up is Ally Bank. I like to think of this one as the solid, dependable all-rounder. Ally gives you a very competitive 3.50% APY. And the best part is there are no conditions, no hoops to jump through, no minimum balance. What's really cool are their tools, like savings buckets. It lets you visually split up your savings for different goals, like an emergency fund or a vacation fund.
The only real catch? You can't just walk in and deposit physical cash.
So yeah, Ally is perfect for anyone who wants a great no-fuss rate with some really helpful digital tools and who doesn't deal with a lot of cash.
Next up, we've got Marcus by Goldman Sachs. This one's the simple savings powerhouse. It's for the purists.
Marcus actually beats Ally just a little bit with the 3.65% APY. Again, no conditions. It is super streamlined, and its standout feature is same-day transfers for up to $100,000 for free. That's huge if you need to move money fast. But that simplicity is also its main limitation. Marcus is just for savings. No checking account, no mobile check deposit.
So the bottom line here, Marcus is the perfect choice if you already have a checking account you like and you just want a dedicated, no-frills place to earn one of the best interest rates out there.
And finally, there's SoFi. Think of this one as the all-in-one, feature-packed fintech. But it does ask for a bigger commitment.
SoFi comes in with the highest potential APY, a massive 4.50%. But, and this is a big but, you only get that rate if you set up direct deposit with them. If you don't, the rate isn't great. If you do go all in, you get a ton of perks. Integrated checking and savings, you can get your paycheck 2 days early, and unlike the others, there's a way to deposit cash, though it does have a fee.
So, SoFi is really built for the person who's ready to switch their main bank completely. If you're willing to move your direct deposit to get that top-tier APY and an all-in-one digital experience, this is your champ. Now, this all sounds amazing, but let's be real for a second. It's so important to be realistic. So Section 4 is all about the real-world trade-offs. No bank is perfect, and online banks have some specific challenges you need to know about.
Okay, challenge number 1, customer service. This is probably the biggest trade-off. You can't just walk into a branch and talk to a manager if you have a complex problem like a fraud alert. You're relying on a phone call or chat window, and the data shows the average time to fix a problem has actually gone up recently. Now, issues are rare, but when they happen, it can be really frustrating to get them sorted out.
Next up, the cash problem. If you're a server who gets paid in tips, or you run a small business that deals in cash, this is a real hurdle. Most online banks just don't take it. There are workarounds like using a retail network, but that costs you a fee. You could also buy a money order. Honestly, the best strategy for most people is the third one. Just keep a free checking account at a local bank. Deposit your cash there, then transfer it electronically to your HYSA. It's a hybrid approach that gives you the best of both worlds.
And finally, you gotta understand the speed of money. Most free transfers between banks take 1 to 3 business days. That means if you start a transfer on a Friday, you might not see that money until Tuesday. If you need it faster, a wire transfer is an option, but that usually has a fee. This is exactly why a feature like the free same-day transfer from Marcus is so valuable. The key is just to plan ahead.
All right, you know the pros, you know the cons. Now for the most important part, Section 5, your 5-step action plan. This is how you actually do it, how you make the switch and stop leaving free money on the table.
And honestly, it's ridiculously easy. Step 1, pick your champion. Ally, Marcus, SoFi, whichever fits you best. Step 2, get your info together. You'll need your social security number and a photo ID. Step 3, fill out the online application. I'm talking 10 minutes tops. Step 4, fund your new account. You can just link your old bank. And then step 5, this is the secret sauce for success. Set up automatic recurring transfers. Pay yourself first and let that high-yield rate do the heavy lift.
And that brings us to our wrap-up, reclaiming your financial future. Look, this isn't just about chasing a higher interest rate. It's about making a fundamental choice about how you want your money to work for you. Let's just come back to this number one last time. $399. That's the extra money you could have earned this year on that same 10 grand. Think about what that is. That's a plane ticket. It's a new phone. It's a huge boost to your emergency fund. It is real money that you are basically giving away for free by staying put.
It really all boils down to this. In this day and age, just being complacent with your finances is expensive. Sticking with your old bank just out of habit, it has a real price tag. The tools to build your wealth faster and smarter are right here. They're safe, and as we've just seen, they're easier to use than ever.
So, we end right where we started, with a question. You have the information now. You know what you're losing, you know what you can gain, and you know exactly how to do it. The tools are on the table.
The only question left is, will you choose to use them?